I'm actually Hello guys, good afternoon everyone. Um mic check. It's your boy Hyper again, and today I'm kicking off my 30 days trading challenge. Alright. This is the challenge I aim towards accountability. Yes. The aim of this journaling process, because that is what this is all about to me. I want to journal, I want to trade, and I want to teach people how I trade the New York session using inversion fair value gaps. So it's more like a session where we are going to repeatedly dish out a concept in trading that is called inversion fair value gap, whereby you understand price action from the point of view of fair value gaps invalidation. Okay, an inversion fair value gap is a fair value gap that has been invalidated, and I'm going to take you through our thought process for this 30 days challenge, and I'm going to be repeatedly doing it every day for 30 days. So I will show you like a framework that is constant. It is a framework that we are going to be working with every day when we come into the market. So eventually I'm going to explain some concepts that you'll be seeing on my chart, like IBSL, which is initial buy side liquidity, initial sell side liquidity, ISSL, and basically explaining every line I have on my chart here. So today is Tuesday, the 29th of July 2025, and this is Euro USDT pair. These, I know that you can see these horizontal lines. These horizontal lines are basically the session, the time of the market. This is the time. So this right here is 7 o'clock New York time. If you want to synchronize your time with mine, you can click this settings button here. Oh, sorry, not that settings button. You can click this time here and choose New York. That is how you align your chart with mine. So New York 7 o'clock, New York 8:30, New York 9:30, which is where I start looking for my setups. This is New York 12 p.m., where I stop looking for setups. I don't take trades, I don't press buttons between 12 and 1:15 a.m. Sorry, p.m. So from 1:15 to 4 p.m. is actually trying to get the afternoon session lasts trade. Okay, so um if you are new to my channel, please subscribe, and I'll be dishing out content steadily about inversion fair value gaps, and I believe that's what my channel is all about. The morning session was quite messy. It was very messy. Like, if you check what we had after the sweep of the initial side sell side liquidity, let me quickly zoom out to the 1 hour chart so that you can get the context of the vertical lines, of the horizontal lines. So this is our on our order block. That is how we have this horizontal line here. It's an order block. It's a breaker. When price broke out from this level, this high here became the breaker block. See, price tapped into the breaker block, and we are trying to know whether it's going in for a reversal using inversion fair value gaps, or we are going to see price gravitate to the downside. Euro USD has been extremely bearish, so if this level fails us, we are more likely to see price gravitate to this 1.10654 level. So if this level holds, we are just going to take quick partials here and call it a day. So this sell side liquidity was taken into this order block, and I'm going to use this as an example to show you immediately how I frame my setup. Yes, so this is about, I've mentioned the horizontal, the vertical lines here. So let me go over to the horizontal lines, and this is where I will show you the framework that we are going to be using to take our New York morning session and afternoon session trades. So let us go down to memory lane and remember our traditional candlestick, what it looks like. um, a bearish candle makes an open first, then a high, then a low, then it closes down the near the close. So a o open high low close is a typical bearish candle, and an open low high close is a typical bullish candle. So this guy here is bearish, bearish, and this guy here is bullish, and I will tell you why. I will tell you why a open low high close is bullish and open high low close is bearish. It is what we are framing our whole challenge around. So I think I should get that clear. Okay, everything turned to green. Oh wow. On a typical bearish day, we are expecting price to sweep above the open, that is typically making the high of the day, and after making the high of the day, a bearish candle will typically make a low of the day and close near the open. So we are going to have this as a visual of that. We are going to have an open right here, a high for the day, a low for the day, and we are going to have price closing around here for a bearish day. So this is what it looks like. This is the open. This is the open. Now this is the high. It is where you get manipulated. The high of the day is where you will see that uh, liquidity sweep, stop hunt, and all those kind of stuff that make us cry. That is where it happens. The high of the day, and this is the low of the day, and you'll see price closing near the open. I think I should. There is no way to make this thing completely red at once because I want to explain the bullish one. On a bullish day, we are going to have price sweeping the we are going to have price sweeping the low, the open of the day. So let's say this is the open of the day. Price sweeps it and makes the low of the day, then proceeds to make a high, then you see price closing near the open. So on a typical bullish day, we are going to have an open. I think I'll now change this one to like this dark green. No, this is not visible. Okay, so this is a typical bullish day. This is how price action is actually framed for an intraday trade. A typical intraday trade, you can get this whole package from ICT 2024 lecture. So I'm just breaking it down in a way you can understand. Sorry, this is the low of the day. I don't even want this session to be always long, so I want to explain a lot of things fast and before 30 minutes be done and call it a day. Whether I take a trade or not, I will be glad if I eventually explain what I'm looking out for in the day one. So back to business. This is open, low, high, high of the day. I'm coming now. Let me cross check what I did here. Typical bearish day, open, high, low, and close. Bullish day, open, low, high, and close. Yes, that's it. So now the big question you are going to be asking yourself is, what time of the day are you going to consider as the open of the day? Or uh, like, you want to be precise when you are pointing out the open for the day. You don't want to be guessing out. You don't want to be guessing your open for the day. So the open for the day is a time of the day basically, and you can start from midnight to mark out your initial buy side and initial sell side liquidity. You can actually do that from there. Disconnected. Oh my god, did I get disconnected? Damn, did I get disconnected? So from the open of the day, right, when you see price forming a low first, you should anticipate bullish price action, because remember, from what you have as the skeleton for a bullish day, from the open, when price starts making a low, you are anticipating an uptrend. So what you are actually looking for from this open of the day is price reversing to the upside. Okay, and when price starts making low, you start looking for inversion fair value gaps. That is where we come in. Okay, that is where we come in. But before we go into that inversion fair value gap, I want to make sure that I point out the reason why I am using 7 o'clock instead of 12 midnight. Where is that 12 midnight? This is 12 midnight. So the reason I'm actually using 7 o'clock is recent price action. I want the most recent play out for my intraday trade. Guys, please subscribe to my YouTube channel if you've not subscribed. I'm doing a 30 days challenge where I will be teaching and documenting my thought process for intraday trades, and my trading strategy is inversion fair value gaps. That's basically what I do. That's what I trade. And today is the day one. So if you are lucky to be here, you are no, like if you are here, you are actually lucky, because today I am forming a framework for the rest of our 30-day uh, trade days. So uh, from tomorrow I may just brush this aspect, and then we will kick off to just like uh, entering trades, waiting for price to hit our targets and stuff like that, learning our lessons, you know, one trade per day kind of stuff. We want to be in and out of the market ASAP. All right. So for the records, I don't have any open trade yet. Yes, because I expected price to come back to this level. I'll tell you why I'm waiting for that level too. So down to our intraday trades. All right. So once I mark out this my 7 o'clock and mark out my 8:30, the reason why I mark out 8:30 is because of news. There is always economic news released by 8:30, so I mark it out even though I don't trade until 9:30. That is where I like to call the rest of the liquidity is flushed at this time of the day. That is where smart money starts to inject liquidity into the market. That's where you see very huge volatility in the market, and if you are not informed, you will not even know where price is coming from or where price is going to. Don't be like me 5 years ago. So once you have marked 7 o'clock, 8:30, 9:30, morning session ends by 12 o'clock. So if you don't want to be trading the afternoon session, you can leave out this the rest of this 1:15 and 4 p.m. Remember, we are working with New York time. Yes, New York time is our trading time. So you have to actually set your time zone to New York and operate with that depending on where you are on Earth. So initial sell side liquidity is the low that is the most recent low that is before or after 7 a.m. in the morning, and initial buy side liquidity is the most recent high, after 7 o'clock or before 7 o'clock. So the reason I actually use this high here is because there is no visible high to use as my initial buy side liquidity, which I would treat as an important key level for me for framing my intraday trades. So this right here is initial sell side and this is initial buy side. So let me go back, let me take you back to our skeleton of price action. Yes, so remember today we're actually seeing price gravitate upwards, and I'm going to tell you why I am bullish using this bullish framework here. So our open of the day is our initial sell side or initial buy side when you're in a bearish scenario. So we are waiting for price to make a low right here. Okay, so this low here is everything that happens, every liquidity that has been engineered below this opening price by smart money. So it's basically like waiting for that low or that manipulation leg below the open that we have here. So I don't even know if I'm fast, but I hope at this point I've been able to point out salient, what was that word, salient points for this this challenge. Okay, so uh, this price action is for intraday trades, and my strategy is inversion fair value gaps. So what happens in this leg? Let me zoom in a little bit. What happens in this leg that takes out the open and high is where we look for our strategy. This leg is where we look, and I will tell you why it happens and why we are waiting for our setup there. You know that when price wants to take out a high, it usually does it with consecutive green candles when it's making a high here, or consecutive red candles when it's making a low here. So those consecutive green candles is what we are interested in a bearish scenario. Those consecutive red candles or black candles is what we are interested in a bearish scenario, because those fair value gaps, once price is closed above it, once price closes above it, that is where our stop starts forming. Okay, but I will explain it I will explain it with our setup for today, so that you can get a quick hang of what I'm trying to say. You know, in that situation where you are trying to flesh out the skeletal framework of what is contained in something, that is what I'm trying to do. I want us to flesh it out so that in the consecutive days we are not going to find it difficult when we are looking at price action from an inversion fair value gap perspective. So initial sell side liquidity taken. Remember, we are treating it as our open for the day. Okay, we want to see a liquidity sweep below this point in price, below this point rather. So when you zoom in, sometimes you may not see it from a 1 hour, or uh, when you don't see it in a 1 hour, you can actually drop down to 30 minutes. When you see it in 30 minutes, stop, work with what you have in 30 minutes. But if you don't see it in 30 minutes, you can actually drop to the 15 minutes, even up to the 1 minute chart. But nowadays I don't want to be operating in 1 minute chart, because I want to have that leverage of seeing price from a rare point of view. If rare is the word, but I want it slower. I want to digest it slower. That's basically why I remain on the 5 minute chart. So let us actually zoom in to what happened in the New York morning session today. So at exactly 8:55 a.m. New York time, this our initial sell side liquidity was taken. Guys, actually you can make your streaming quality clearer. If you want to make it clearer, just click on the settings button on the top right of your screen. Once you click on the settings icon there, it will ask you to choose the quality of the stream that you want, and you are and once you click on the quality, choose high quality picture. Once you click on high quality picture, you'll be able to see my candles clearly. Okay, because if you don't do that, it's actually going to be blurry and you will not get what I'm showing you in details. So it's important that make your you make your phone use higher quality pictures for my streaming. All right, so talking about the business that went on here. See here, there is a fair value gap here. This fair value gap, the low of this candle and the high of this candle was a gap. All right, and this gap is what we are interested in, because once price closed above it like it did here, we are going to pick interest in it. Okay, we are going to pick interest. Let me actually remove this one. We are going to pick interest in it because this is where smart money reversal starts to happen. That midpoint is what we are looking for every day of our trading. Every day of our trading, that inversion fair value gap is what we are looking for. But first of all, we want to see it take out an initial sell side liquidity in a bearish scenario, or our initial buy side liquidity in a initial sell side liquidity in a bullish scenario, rather, and initial buy side when we are expecting price to go down, just like we have it here, just like we have it in this framework here, right here. So New York morning session was kind of messy. I was not interested in opening. I wanted to wait for price to show me its hands, because Euro USDT has been quite bearish. I think it hit an all. It was not really an all-time low, but it has been bearish for a while. So I wanted to have price show me its hands first. All right. So it was a messy morning session, no trades taken. But if you observe right here at the 12 p.m. mark, price started to show us that okay, I'm ready to I'm ready to go to the upside. That is where I picked interest. So between 1:15 and 4 p.m., which is the market close, I'm expecting price to actually give us a nice entry at this midpoint here. So guys, who do you think is the best trader in Africa right now? I want to know your thoughts about the best trader in Africa right now, because I've been following these guys on Twitter. I see a lot of things going down on Twitter. I'm not going to call names, but I'm not about the fake life. I'm not about the best influencer, you know. Let me know who you think is the best trader in Africa right now. So right here we have our breaker block. Yes, we have our breaker block here. So breaker block is basically what I use for when I'm expecting price to rally. All right. When I'm expecting price to rally, I trade off breaker blocks, because that is the next place price will find. That is the next place smart money likes to move price with breaker block. So I think I'll have that to the right. think it's not bold enough. Yes, this is our breaker right here. And our business for the day actually is going to be closed here. Okay, so if God willing, this is not a turtle soup to send price back down, because I see that happen a lot. Yesterday I actually took a loss. My yesterday's trade was the same thing that happened, the same framework, so I'm not ashamed to show my loss. I just want to let you know that there is a thought process behind my trading. There is a thought process behind intraday trades. That is what I'm trying to actually show you. So you see, price actually came back to take us out. I think my position was opened here, but we could not make it to the high of the day, and boom, that was yesterday's business and how it went. So this is what we have for our day one. Yes, this is what I have for my day one, and because this is a live stream, i'm not going to I'm not going to make it long, because I want it to be digestible too, in as much as I want to dish out knowledge. I still want it to be concise and consumable. So by tomorrow we are going to review our trade. We are going to know what really happened. We are going to check out price once more to know whether price respected our levels or whether we hit stop loss right here. Okay, so guys, that is all for day one. Please subscribe to my YouTube channel if you have not subscribed. I love you. Please come back for my day two. I will really appreciate you. I will be trading a New York morning session. Basically, I did not stream in the morning session because there was no trade, so it was a messy morning session, as you can see right here. So but I like us to actually do our morning business and leave the chat on time. So I will just end my live stream and wait for our setup. So thank you for turning up. Thank you for showing up. I really appreciate, and I will see you in the day two of trading price action real time inversion fair value gap strategy New York morning session. Bye bye guys. Price is actually going to our POI. Anticipate. So that is all for this session. Actually, uh, my live videos, you can see it in the recording in the live session of my YouTube video menu. And it's your boy Hyper. I'm signing out. Thank you guys for signing in. Please subscribe. I am begging you to subscribe.